Bitcoin is crashing below $90,000. What the heck is going on? Is it all over? We're going to talk about that in this video. I've actually waited a couple days to gather my thoughts and really form an opinion on what the heck is going on. I'm going to share that with you in this video. But before we get started, if you don't mind, hit the like button, subscribe. We're on our way to 10K. I'm going to start making more content. What a wild, wild time we are in. So Bitcoin fell below its 50-day moving average, which is around 102,000. We got that close last Sunday. I'm filming this Wednesday evening, and it looks like we are not going to get that weekly close, or rather that bounce back above the 50-day moving average, which would mean 2 consecutive weeks below the 50-day moving average. And if you subscribe to Benjamin Cohen, which I know a lot of people do, they would say, gosh, that kind of means we're heading into a bear market. Not to mention, we have been below the bull market support band throughout this entire time, right? So things look grim, right? I'm going to tell you exactly how I feel about this in just a second. I do want to give a little bit more context as well, and that's the fact that we really haven't gotten a bounce up since we fell below the 50-day moving average, right? So if you're to say, hey, Doc, we fell below the 50-day moving average, but we got this bounce right back up to it or near it, right? If you were to say, hey, Doc, I knew we fell down to 89, but then we got back up to 97, 98, 99, we're flirting with the 50-day moving average, I would say like, oh, okay, maybe things are not looking that bad. But it's not likely that we get back above the 50-day moving average anytime soon, right? The Tesla is full self-driving, so I'm putting my hands in Elon right now, and hopefully he can drive me home safely. So that's concerning, right? Like, that is concerning. Why is this happening? Well, today we found out the labor of Bureau statistics, the labor market, they're not releasing jobs data, right? And for October. And with that news, the chance that we get this is really important, the chance that we get a rate cut on December 10th, which is the next FOMC meeting, it's down to 33% chance. That is spooking the market. So just to put that in context, a month ago, it was like an 80 or 90% chance that the Fed was going to have a rate cut at the next FOMC meeting, December 10th. Now it's a third of a percent chance. And gosh, if you were to ask me a week ago, I actually filmed the video a week ago, but I didn't release it. If you were to ask me a week ago in that video that I filmed and didn't release, I would have said, oh, I actually think we are going to get a rate cut despite the FedWatch tool being 50-50. Now I actually have no idea, right? Because the Fed, i.e. Powell, he can make a compelling argument that like, hey, we don't have any data. Why should we cut right now? There's another FOMC meeting in January. Why don't we just wait until then? So I lean like maybe they'll do it, but I actually would be not surprised if they didn't cut either. I'd be like, oh gosh, they've been claiming they're data dependent this whole time, right? They've been claiming they're data dependent over the past several years. So it actually would be on brand for them to be like, hey, we don't have any data. Now, personally, I think they should cut, right? It's not a question of do I think a cut, but should they cut? Yeah, I do think they should, right? The labor market is weakening, right? Credit card debt's at an all-time high. Delinquencies are at an all-time high. There's a ton of other indicators. People are hurting. The average, just kind of middle class person is hurting. Not to mention the lower class person's really, really hurting as well. So this is all for me to say, is the market over? Is the bull market over? And right now, that is my base case. And that's tough for me to say because this took me by surprise, right? If you're in my Discord, which is totally free, link down below, we're going to be talking about all this stuff throughout the bear market. And who knows, maybe this isn't the bottom, maybe we rally back up, but I've been very active in the Discord despite me not making videos every day. like I used to. My base case is that we are in a bear market, and that is tough to say. I hope that's not the case. And I actually think I've had pretty realistic prices, targets for Bitcoin and ETH this whole time. Like I've been saying, I think ETH gets to 5,700, and a month ago, that was like a conservative view because everybody else on here is screaming 7, 8, 9, 10K, 15K. I saw a video, someone said like 36,000 Ethereum. And I would just see that and I'd be like, dude, there's no way that's happening. So I thought I had conservative targets of 57 to like 72. And it looks like that's not going to get hit either. Which is tough, right? Like, you know, alts got destroyed. ETH fell below 3K. And that's tough. It creates a tough environment. And I think that's a really actually good nod that you need to be diversified, right? So I've been talking about stocks and options more recently as of late in the Discord, and I do think it is good to be leveraged, right? I've been leveraged with crypto, with stocks, and then I own a couple houses too. So just trying to have a well-balanced portfolio as much as you can. And then I think probably even more important than that is it really goes to show that you always need to have cash on hand. You can never be 100% invested in the market. And I remember last cycle when I was in crypto, I was like, no, all my chips are in. And I just kind of realized maybe as I get older, as I have less hair on my head, that you can't do that. You got to have some dry powder on the sides. With that being said, I'm not making any new buys right now. I'm really much just waiting and seeing. I've trimmed some of my SUI, ICP, CAS, SAY positions. I haven't sold all of them out. I've trimmed those. I trimmed some of my ETH. I've trimmed a decent amount of my ETH. I've trimmed some Bitcoin. Haven't touched simple AI just because the price is beaten down. There's no sense in me selling. So that's my thought process. I guess kind of the other thing that we do need to be watching for is NVIDIA earnings just came out and they killed it. They beat on revenue, they beat on earnings per share, and they beat on guidance. So that we call that like a triple beat. Sometimes you'll hear refer to it as, oh, they beat on the top line and the bottom line number. Top line's revenue, bottom is earnings. So it was great. And it's pulling, right? It's the largest publicly traded company, right? Over $4.5 trillion. It is going to influence the market. Whether you are invested in stocks or NVIDIA, it doesn't matter. It is going to have a positive impact on the overall market. Here's what's really important. If you made it this far to the video, this is what's really important. This would be super bearish for crypto and stocks. And yes, it totally means crypto too. NVIDIA's up. If NVIDIA gives back all of its gains over the next day or two, that would be a negative sentiment for the market. It would say, hey, we got these really good earnings for the largest company in the world, but it's giving back some of those gains. That would be a bearish signal. So keep your eyes out for that. Let me know in the comments down below. Do you think the bull cycle's over? And I want to know the why. I want to know why you think it's over. Or if you're like, Doc, you're totally missed the mark. It's not over. We're going to rally into Q1. Let me know why. Because guess what? We all learn together, right? Like, yeah, I feel like I'm pretty well kind of in tune with this market, right? I have an MBA with a concentration in finance. But guess what? I'm still learning too. So let me know your comments down below. If you got any value out of this, hit the like button, hit subscribe. Let's get through this journey together, and I'll see you guys on my next video.